Good afternoon everyone and welcome back to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ. Apologies first of all for the delay. We ran into a technical issues. Of course, this is the age of technologies and technology tends to not have your back sometimes. But that said, if you look at the market also, it's been a very tepid day. It seems like just the momentum or the life out of the market has been sucked out by the market god Santo, because there's been 3 consecutive days that we have been seeing this sort of very lackluster trading where it just seems that neither there are buyers nor there are sellers in the market. Everybody has already gone out for their year-end holidays as the Christmas approaches. But if you look at the Sensex and Nifty, they are still outperforming compared to global markets. If you look at how European markets have started off, they have actually seen much more selling pressure today, including also Chinese market and Hong Kong market also have seen much more selling pressure than what we are witnessing in our markets. But the culprits for the lackluster performance clearly is Infosys, SGFC Twins, as well as Titan. These are the major 4 stocks that have been, resulting in the sort of drawdown that we are seeing in the benchmark indices. That said, the sell-off actually is a little bit more intense in the broader market. That is where the mid and small cap stocks are actually, if you look at the indices there, they have fallen much more than the sort of decline that we are seeing for the Nifty at this point of time.
Well, market seems to be struggling for some direction at this point in time. It seems to be a case of who will blink first between the bulls and the bears.
Nicely put, Santo.
With the market very close to its record highs, I think there's a fair bit of trepidation on both parts. That said, CJ, it does look like mid caps could underperform for some more time to come. And most, if you look at some of the wanted names in that segment, they've not been really doing well. The it's been to that effect, it's been a very narrow rally. You've seen the frontline stocks rally quite hard. But if you look at the second line stocks, the performance has been very, very patchy. And if you again look at the second quarter numbers there, that may really make you question the valuations that some of these stocks are again enjoying. If you look closely through the analyst reports post earnings, you'll see that in most cases they have actually trimmed earnings estimates. Very rare has been the stock where they've actually upgraded the earnings estimates.
You talk about earnings, Santo, especially in the broader market, and my colleague, of course, Ravindra Sonawani, did a very interesting story wherein he was looking at, the debt servicing ability a lot of the mid and small cap companies. Because remember, that theme or narrative in 2020 and 2021 was that corporates have utilized the lockdown and the cost savings that they had done to pare down their debt very sharply. And overall, if you look at corporate India's debt levels did collapse very sharply in 2021. But now, if you look at 2020, and again, we have started to seeing that the debt service coverage ratio of the Nifty Mid Cap 100 and the Nifty Small Cap 100 companies has almost halved the gains that it had made in 2020 and 2021. Clearly, this is happening because not that the debt levels have probably increased, but more so because the operating profit performance has gone down, and in some cases actually seen a very sharp decline because of the commodity price, inflation that we have seen throughout of the past 12 to 18 months. So clearly, at this point of time, the argument that, the debt conditions were so good for companies that they will go out and, binge on capex, I don't know if maybe that argument might need to have a relook again or reevaluation again, given the fact that the debt servicing ability is deteriorating for a lot of mid and small caps.
And also, let's not forget, CJ, that interest rates are rising. Previously,
Yes,
what used to happen was that when local interest rates were rising, companies often went and borrowed overseas.
Absolutely.
Now, that I don't think funds are any cheaper abroad also.
As they are not at home.
Yeah, exactly.
Anyway, moving on to
just a quick look at the FNO cues. Short build-up seen in futures of Info Edge, Hindustan Copper and Mindtree, and we are seeing long build-up in futures of GMR Infra, Shriram Transport Finance, Tata Consumer and Exide. Exide really has been some kind of
stock of the week, I think.
The stock of the week,
Absolutely.
But again, there has been many false dawns in the past, so I would hold my horses
said, Santo.
there.
I think thank you for those FNOQ, Santo. But moving on to some of the stocks that are on our radar today, and we have got four stocks that really have been moving the market today. Santo, starting off with
Lemon Tree somehow has managed to fare better than some of the other hotel stocks. The stock is now trading around 91 rupees. But that said, CJ, again, I would be a little cautious at this point in time. The rate at which hotels have been hiking their room rates, I feel that at some point they will run into resistance from consumers. Now, in the case of Lemon Tree, it's largely caters to the business clientele, and there again you see there was a pent up demand which to a large extent has played out. If you look at the first and second quarter earnings, the top line hasn't really changed all that much. Margins have also been pretty much steady. Of course, the management commentary has been pretty upbeat. Mr. Pattu Keshwani was there on the channel CNBC TV 18 channel today, and according to him, EBITDA margins are now about 20% higher than the pre-COVID levels, and for the second half of the year, the outlook appears to be quite good, positive. But at the same time, there is one thing which is mentioned, and he said that in Goa, the hotel business in general has been hit by the growth of homestays, right? And that to me is probably an indication that maybe it's also a signal to hotels that probably they're charging quite a bit now, which has opened up a small window of opportunity for some of the unorganized players at this stage.
As someone who has had been to Goa over the past 12 months, I can actually reconfirm that yeah, I did not stay at a hotel. I actually stayed at a homestay.
But
and
then,
of course,
you don't expect anything else from millennials.
No, but you know, another trend that also people are doing is the fact that, you know, with the availability of Airbnb, you know, it's very easy to now find out information about homestays. And what individuals or people tend to do is that they will start directly contacting with the homestay owner and negotiate rates that are actually much lesser than the listing price that they see on Airbnb or even say Make My Trip or any of those, you know, listing catalogs. So clearly, this is affecting, you know, hotels, wherein earlier your go-to place would be a hotel. Now your go-to place is a homestay, especially in popular destinations like Goa, and I'm pretty sure you will see that in winter, you know, destinations such as Kerala, probably Tamil Nadu, also, you know, the Himachal and Uttarakhand as well. That said, Santo, I think I share your caution on Lemon Tree, because if you look at the entire theory around, you know, hotel companies, it was the pent-up demand that was supposed to come in as COVID lockdown eased and COVID-related regulations eased. Now, I think we have seen a fair chunk of that pent-up demand in 2022. It is reflecting in the earnings and the revenue growth that a lot of these companies have posted. But going ahead into 2023, I don't think you will see this pent-up demand continuing. That will largely fade away, and we will see much more normalized conditions as far as the travel industry is concerned. Apart from that fact, if you look at it from a technical point of view as well, the stock has rallied about 50% in just 6 months. With such a sharp, you know, and intense runoff on the stock, I expect that there should be a period of consolidation on the stock, which may not, of course, be a negative, because generally, if those period of consolidation can lead to a little bit of profit booking, but then eventually it is overall good for the long-term gains or returns in a stock. But at this point of time, I do share a caution as far as Lemon Tree is concerned. Moving on to my first pick of the day, and this is Paytm. Of course, the stock has been slammed today on the back of a block deal from Softbank, which is one of his pre-IPO investors, as the you know, pre-IPO lock-in ended today. But if you look at, you know, who are the buyers that are emerging now, CNBC TV 18 broke a story suggesting that the investors or the institutional investors who have picked up stake from the Softbank block deal include the kinds of Norges Bank, which is one of the world's largest sovereign you know, wealth fund of Norway, of course, and Seganti, along with others such as Gisalo Fund and a few others. So clearly, the pedigree of the institutional investors, Santo, that have come into Paytm goes to show that really not everybody has given up hope on this company. There are investors out there who are clearly finding value in Paytm at this juncture, and that is the reason why they are investing millions and millions of dollars to buy stake in this company. Overall, also in recent times, in recent quarters, Paytm's earnings momentum has improved quite sharply. Investors have been impressed by the path to profitability that the company has laid out, in terms of suggesting that the September quarter of FY24 will be when they will start to break even in terms of the operating line. And recently the CFO also had indicated they actually are much ahead of that target if you look at the September quarter earnings. So from my point of view, any dip on the stock is likely to be a buying opportunity for investors who had been holding out for a long time for value to emerge as far as Paytm is concerned.
But CJ, to me, I think what Paytm looks like at this point is more of an occasional tactical bet. There will be windows of opportunity where you will see sharp declines in the stock price. Now, for instance, you've seen the stock fall sharply today after the block deal. So maybe the market is anticipating that there could be more supply now that the lock-in for pre-IPO investors is over. That said, CJ, what we are seeing so far, what you describe as earnings momentum is, yes, there is an improvement, no doubt. At this point, it is still narrowing of losses, because at some point again market may say fine, narrowing of losses, break even is fine, but how much more longer till we see meaningful profits to kind of justify these kind of high valuations. Remember, there are plenty of other stocks also to play the theme that Paytm is offering at this point in time, far more profitable companies. So, Paytm is up against those companies. Also, it happens to be in a field which is undergoing rapid disruption all the time. So, that said, CJ, there will be trading opportunities from time to time, but are we looking at a sustained upside anytime soon? I am still a little skeptical on that.
As usual, Santo, as usual. Nothing can convince this man about Paytm at this moment at least.
Well, next stock on our watch list is Aarti Industries. Again, within the chemical space, this has been one underperformer stock, now close to about 35% of its recent highs. Now, according to Morgan Stanley, the second quarter numbers clearly showed that there was demand weakness. Of course, some plant maintenance shutdown also contributed to the lackluster numbers, but there is no mistaking the demand weakness also. And Morgan Stanley has said that there are a couple of factors which could hold back the stock in the short term. One is, of course, the demand slowdown. This, in addition to that, the ramp up in capex has been a little gradual, and also there are no other major triggers. So, that could perhaps lead to the stock underperforming in the short term.
Yeah, Santo, I think in the past 2-3 months, the stock has clearly underperformed also because of the hit to the European business or the European side of the business for the company, and that is one of the reasons why Aarti Industries has suffered so much even in the September quarter earnings. But I think if you were to ignore the near-term pain, I think overall Aarti Industries still remains a very, very strong story. The long-term outlook for the company still remains quite strong, given the fact that they are investing quite heavily in the capex or the capacity expansion. They have already more than doubled. They have guided for more than double expenditure on capital capex for FY24. So that goes to show that the company or the management is very, very bullish in terms of the demand that is out there for their products, Santo. And also another theme to look out for with respect to Aarti Industries over the next 12 months will be the rising capacity utilization in many of the newer plants that are coming on stream for the company. Analysts believe that the rise in capacity utilization could drive earnings growth of in excess of 22% on an annualized basis over FY24 and FY25, which is in no means a bad run rate to have as far as EPS growth is concerned. Lastly, of course, one of the major, Aarti Industries was seen as one of the major beneficiaries of the entire China plus one, story that market has been talking about for the past 2 years, ever since the pandemic has happened globally, with Chinese exporters now withdrawing their feet from the export market. Indian exporters are seen as the next best destination to go to, given the fact that we already have the setup, we already have cheap skilled labor, and all that we needed to do is just the technological, innovation as well as the expansion in capacity. So clearly, companies are, looking at this sort of opportunity, and Aarti Industries will turn out to be among the big beneficiaries.
Well, last stock on the watch list, CJ.
Well, Santo, the last stock is one of the stocks that has been talked about the most, in today's street, and this is R Systems International, a small cap IT enabled services company which has recently been acquired by Blackstone of all people. Yes, Blackstone has acquired the promoter's stake, which was a majority stake, and has now offered to do an open offer for acquiring an additional 48.33% stake in the company at a price of about 246 rupees per share. Now, this acquisition, if it goes through, if they were to be able to acquire 48.33, that will mean that Blackstone will then own 100% of the company and therefore can take the company private. But the only problem here could be the fact that out of the public shareholding of the company of 48.33%, only one individual owns about 36 to 37% of the company. Now, Bhavik Tripathi, who is an individual investor, owns about 35.53% stake in R Systems, and a related company of the individual also owns about 1 to 1.6% stake in the company. So overall, almost majority of the public shareholding, Santo, is now in the hand of one individual, and therefore I feel that probably the open offer price could end up being much higher than what Blackstone has offered at this point of time. Also, Blackstone, of course, has said that it will go through with the open offer if it can get at least 26% stake. That would mean that it will not have enough to take the company private. And even in that case, even if the company does remain a listed entity, Santo, I think Blackstone, with its success with emphasis, has shown a track record of turning around, these companies into mid cap and large cap companies that we have seen, especially with the instance of emphasis. So both ways, it will not turn out to be a bad bet for retail investors, those who are trying to play the delisting story or those who are trying to play the long-term story as far as the company is concerned.
Well, the delisting story here, CJ, now given that a significant chunk of the holding, retail public holdings is with Bhavuk Tripathi, a lot depends on which way he decides to swing, right?
Absolutely.
Typically what happens in these kind of delisting cases is that a group of investors come together and then they try to bargain hard against with the entity which is making the open offer. But in this case, very clearly almost what, 37%, and then when you take away the promoters 51%, that's about 88% of the
free float.
Free float.
Yeah.
Not free float, the promoter's float is never really free in that sense. So 88% of the equity base is then locked. You have 12%, unless all those 12% shareholders owning 12% come together and then they say that, look, we want a higher price. But very interesting if you look at Bhavuk Tripathi, because I can't find his name in any other. So this is just one stock, typically
that he owns. Yeah, it's worth about 1,000 crores. I think his stake in the company is worth now close to 1,000 crores, especially after today's 16% rally. So it will be interesting to see whether he drives a hard bargain with Blackstone in terms of, maybe demanding for a better counter offer from the private equity investor, or whether he sells out or offers his or tenders his shares at the open offer price that Blackstone has offered, which is 246 rupees per share.
Well, yeah, 272 is what the stock is at this point.
Which is already almost 30 rupees higher than, or 26 rupees higher than.
Typically, even when companies make open offers, the first price is not always the final price. They always know that if they want to take the company public, there will always be a group of investors who will demand a higher price. We have seen that many times in the past, and companies which have announced delisting offers also, they remain listed for a very, very long.
Yeah, Vedanta is a very very recent example.
Blue Dart for instance, was also about to go private, but it has not in all these years. So anything can happen, CJ.
Well, with that, Santo, let's quickly take a status check on the market and how we are faring on the market. And it seems like the sell-off has intensified. If you look at the Nifty and the Sensex, down about 0.4% at this juncture. The Nifty small and mid-cap indices are also now in quite firmly in the negative territory. I think down about 0.5%. So almost matching the performance that we are seeing from the large cap indices.
But clearly some bit of profit taking is there, but I think what we've been saying earlier, the whole theory about India still being a better bet compared to other major economies, that should hold us in good stead. So big downside from these levels still looks unlikely. Nifty Bank seeing some good selling pressure there. Nifty Bank index is down about 115 points. Exide 4% up about 2%. Indian Hotels is also among the gainers today. Dish TV under pressure. Wipro, Tata Steel among the prominent losers among frontline shares.
And Santo, Nifty Auto is actually the biggest sectoral loser, down about 1.5% right now in trade. So clearly a lot of heavy selling coming in there, and that is largely being driven by M&M, Ashok Leyland, Eicher Motors and Tata Motors, who are down about 2 to 2.5% each.
Well, and what are we keeping an eye out for, CJ?
Santo, of course, you have to look out for US building permits as well as the Philadelphia manufacturing index data for the month of October that will be coming out later in the evening. Besides that, tomorrow, keep an eye out on European Central Bank President Christine Lagarde's speech that will be coming out live from there. Apart from that, HAL, Hindustan Aeronautics, that is Info Edge, Imami and Sun TV will be trading ex-dividend in tomorrow's trade. So keep an eye out on those 4 stocks as well.
Well, and with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and we'll be back again tomorrow.
Yeah, and keep following us on the social media links that you can see at the bottom of your screen. And of course, for the rest of your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live tomorrow morning at 9 a.m. Till then, have a great day.